Yeah. Okay. So yeah, let's kind of pick up where we left off here, talking about lessons learned. I cut you off before, but we were talking about what, like, time frames.
Yeah, 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 yeah.
Yeah. So what exactly were we talking about with lessons learned?
Um, yeah, no, I think we're last thing we're talking about is are we recording again right now or
Yeah. Yeah. We are.
okay, yeah, no. Last thing we were talking about was one of the things we also learned was the fact that you'd have that one good trade and that would kind of lead you to take more reckless trades during that day because you're feeling good about it, you feel confident, and you just start wanting to hop on every single trade after. And yeah, it's just kind of you lose all the profit you made. So the main idea is you get your profit for the day, you get a good percentage, just like leave it, chill out for a bit, try to leave the screen, go do something, and then not until you maybe some time after until you give it enough time until you come back fresh and all that because you're definitely operating based off you just feeling confident because you just had a good trade and that's biased. So
Yeah. And
it's something to psychology. That's all.
so I was just gonna say, small losses add up over time, especially if you're leverage trading. Like, let's say, like in my example, I took one good trade, 10x leverage, made 5%, but then I take four or five, 10x leverage trades, each one losing zero point 0.2, zero point 0.3, 0.5%. You very quickly lose all your gains, and you can end up even losing money.
Oh
And
yeah,
it's happened to me throughout this month where I would take a few good trades, and then I'd feel confident, and then I would get reckless with my trades, take some trades with low probability setups, very volatile trades. I would take trades based off short time frames and hold it long term, and then
yeah,
I just got wrecked. Um, so going forward, it's important to focus on high probability setups, and there's no need to take multiple trades. Like, if you hit it right, if you make a good trade, leave it. You got the rest of your life. There's no need to, like, keep trying to make the same gains, because you might not. You
yeah,
might end up losing what you made. You might even end up losing more money.
yeah. I agree because the way it's set up, especially if you put your stop losses and everything, as soon as you enter that trade, now you're guaranteed to be at a loss just because you entered your trade and you put your stop losses. So now whatever happens, the only guarantee is if it hits your stop loss, you're losing money, right? So the fact that you keep entering more and more and more and more trades on a smaller and you're getting stopped out a lot because you're either being reckless or you're not giving it that much attention and you're just jumping on trades without thinking. um, uh, uh, those stop losses will be hit, especially on volatile market, especially if you're trading Bitcoin or any of those cryptocurrencies. It's always volatile. You're almost guaranteed if you have a 1% or 2% stop loss, you're almost guaranteed that you're going to hit that at one point. So to mitigate that, very high probability setups, very high combination of indicators at play. Not You want to minimize the amount of trades you take. That's the key. You minimize the amount of trades you take, and you combine that with high probability setups or breakouts, and you combine that with your EMAs and all of that. Then on the long term, you'll be profitable. But
Yeah.
just jumping into random stuff just because you either felt confident or you feel compelled to, you have to. Just if you that's what I realized. Like you need to always be asking yourself the same question over and over again. Am I actually entering this just because I'm experiencing FOMO, or just because I'm being reckless now, or is this actually calculated? Do
Yeah.
I know exactly what's gonna? Did I consider my worst case scenario?
Yeah. And I think the talking a little bit about our stop losses here is a fairly good idea because let's say we're like scalp trading, very short term trades, and you place a stop loss, a very tight stop loss. Well, you got to look at whatever security you're trading. If it's Bitcoin, you got to look at the range in which Bitcoin moves, and if it's very often swinging, let's say 1%, through any given hour throughout the day, it'll often swing 1%, and you have a stop loss set like 0.2% or something, you're almost guaranteed to get stopped out. So, understanding uh, the degree of volatility, whatever it is you're trading, usually moves within is very important because let's
Yes.
say, yeah, you know, um, because
Because I think even at one point we had that idea where, oh, there's no way if let's say if we're shorting or if we're longing, there's no way that this is gonna break out of this, or it's not. There's no way it's gonna come back up. It just looks like it's just gonna go your way for sure, and that kind of always brainwashed us to only look at how this will turn out positively in our favor, as opposed to no, look at it very objectively. What is the chart actually capable of? How volatile is this? Has it been swinging a lot or has it been going sideways for a bit? What's the general feel of the market? And almost never, it's never guaranteed that it will not go against your trade
yeah,
and put you in the negative. So,
yeah, yeah, there's a lot of good lessons here to learn, man. But mostly, I think it just comes down to I think combining all these different strategies we've been talking about. Like we've talked about implementing Bollinger Band strategies, looking at our EMAs at the higher time frames, uh, trading based off like macro breakouts off like these macro long term
yeah,
trends, eh, you know. And I think really what we have to like our even our sign MACD, the volume, looking at the order book. That's another thing we haven't really talked much about is the order book, and we can delve into that. But I think what we have to do is really combine all these things together. Not just trade off any one thing, the volume, price, just the more combination of factors of indicators you can use, the better.
yeah,
Yeah, yeah, and we could talk here about the order book because I think the order book is extremely telling. It is and it isn't for different reasons. It is very telling because you can sometimes see when there's clear buy walls and sell walls. But at the same time, it can also be deceiving because a lot of the time whales will place like secret orders, orders that aren't displayed on the order books. So that's
yeah,
something people have to be aware of as well. Hidden walls and shit. But yeah, that's something to consider also. Like yeah, for example, like if you're entering a long, let's say you were longing Bitcoin at 14,000 and
hmm,
you're logging in because you wanted it to go to 16. Well, if you look at the order books at whatever exchange you're trading on, and you see that there's a massive sell wall, there's a lot of sell orders at 15K, then you should expect that there to be a lot of resistance there. You know what I mean? So
yeah,
yeah. People need to be aware that the order book can be very telling. It could really help you out in trying to gauge where support and resistance will end up being
yeah,
because sometimes people will try to find their support and resistance solely based off the chart, and it does make sense and it's often very helpful. But a lot of the time, the order book can also help you really. It can serve as confirmation of a support or resistance as well.
I agree.
Yeah.
Yeah, I
Yeah.
think that it would give you a good feel. I hate Binance. Oh my
Oh man, we
goodness, I
both
hate Binance. Just,
we
just
fucking hate
FYI.
Binance, man. Binance is dog
I
shit.
know this
Yo,
has nothing to do with it, but I hate
real
Binance.
quick. Bitcoin's pumping to the top of that channel, eh? If
Oh yeah, it's looking
is
like it is.
yeah, if we hold above this channel, it's actually very bullish. Because this
I would
this could
say
have been
so.
a fake out, right? So we
Especially
really
the fact that we bounced off the 200 EMA on the 1 hour is kind
exactly
of enough
yeah
for me to.
yep and it seems like we've what is it? Fuck man, on the 1 minute there's like 10 seconds left for a candle to close above it. I want to see a few candles close above the channel before I exit out of the rest of my short at a very slight loss. Oh, it looks like we're getting rejected right now. Because if we get rejected off the channel, then that's very bearish. If anything, that would be like a good spot to add to our short here.
Mhm. Yeah.
But yeah, we got to keep an eye on what's going on right now. Yo, something really weird I noticed on the larger time frames, like on the hourly, the price will be displayed differently than what the fuck's going on the 5 minute chart.
The
So
price is it?
yeah, so it's completely different price on the 5 minute chart. The price is currently at 14,720 basically on the 5 minute,
Mm.
but on the hourly the price is at 14,625. Doesn't make any that doesn't make any fucking sense.
Are you sure?
I'm 100% sure. We're recording, man. You'll be able to see in the recording. I'm 100% sure. On the hourly, the price is at 626, and then I'm gonna switch to the 5 minute, and the price is at 745. What the fuck? What the fuck, Trading
I'm
View?
looking at the hourly. I'm looking at the hourly too. It's just the same price, no?
What price is it at for you on the hourly?
14,743.
Yeah, see on
The
the
five,
hourly.
yeah, and then in 5 minutes, it's
Yeah,
14,743. It's
mine
your
is.
internet connection, man,
I don't.
most
But
likely.
then why is the 5 minute accurate then? Why is the 5 minute the correct price, but the hourly isn't?
It's probably just the way it's feeding the platform, the chart, like the data. It's just,
Yeah, whatever. I guess.
but anyway, um, if we go back to what we're talking about, in terms of stop losses and all that,
Yeah.
and not just stop losses, but once the price starts to go in our favor, trailing that stop loss to proper points where you guarantee that profit and consistency is something that I think that's where the transition from intermediate trading to more of a, you're taking this seriously, you're focusing on long-term gains, on long-term consistency. I think that's where that whole thing lies. I realized that I would rather stay consistent in the way I approach taking profits instead of just quickly selling something just because it went all the way down. I must just get out of it right now. No, that's fine. I expect to pull back. I'm just gonna trail my stop loss, push it closer to the price. If it's at a pivot or like a bar by bar play, which is something we learned recently in how to uh, just strategies to trail your stop losses to guarantee the profit and guarantee that you maximize the amount of profit that you're taking out of this trade. You don't want to be out of the trade fully, because it could go a lot further than you expected it or whatever you fully left your position. So you either wait on it to have some sort of a bit of a pullback, and then you check that that's where we're reacting to right now. Trail your stop loss back to that, and then you will lose more of your profit, but at least it's a strategy. I have to be following a plan moving forward because that's the only way I will find if it's a weak plan, if I need to improve on certain things, and yeah, as opposed to just leaving a trade just because it hit 2% or something. It's just different ways of dealing with it. There's nothing wrong with you leaving your trades fully once you hit your target of like 1% or 2%. But for me, I would like to utilize and ride the wave as much as possible, even if it means that I might be losing a bit of my profit, because I think on the long term, I'd be gaining a lot more.
Yeah, yeah, man. Like having a consistent trading strategy is how you survive in this long term. You know, and another thing too. There's so many ways you can manage a trade, man. There's so many ways you can manage a stop loss, trailing stop loss, based off pivot points, breakouts, significant resistance, EMAs. There's so many ways you can manage a a stop loss. Um, but I think it's also a very interesting idea when it comes to the idea of trying to stay consistently profitable. The idea of placing your stop loss in profit is a way where you can manage, where you can always consistently stay profitable. For example, if we entered a short at 700
Mm.
and it went down to 500, and if we placed our like stop loss at like 680, 690, just below our short. If it were to go
Yeah.
back up, we'd get stopped out, but at least you'd get stopped out in profit. And that's a way where you could almost always either break even or get stopped out in profit. Now, it might suck because sometimes you'll get stopped out of a trade that could have gone your way if you just waited out
Yeah.
some more. And if you're trading based off a like larger time frame, perhaps that's not the best way to go about it. Placing your stop
Yeah.
loss in profit if it's based off like a macro long term trade, because I believe with this one, it kind of is like a longer term trade, man. You know,
Yeah.
um, so we took some profits because we're up against pretty significant support, 200 EMA on the hourly. We both took some
Mm.
profits on our short. But at the same time, we took this short based off like a very macro, very long term movement, which is likely to continue. So, I think the idea of having a stop loss in profit would make a lot more sense when it comes to like scalping, swing trading. And I mean, you do you. You could always still do that even if you're trading off of like a larger time frame. Um,
Yeah.
yeah, there's definitely a lot of ways you can manage a trade and manage a stop loss for sure.
Definitely.
Yeah.
But the key is to be consistent with it. Pick
Mm-hmm.
something and actually stick to it, just so you can see if it's working or not. Otherwise, you won't be able to. You might have three good trades with it, but for the long term, is it good? For the long term, is it working? I don't
Oh,
wanna stick to something that's. I don't want to stick to something that's. I'm making three or four good trades, and then the 10 or 15 trades after, I'm actually losing because of it. So, if you have a strategy, a more known strategy, something you don't have to experiment on your own too. Something that's well known, something that traders previously experienced traders have been through, and they say like, hey, this is actually something good. This is usually what works. Try that out. Does it work for you? But you have to be consistent,
yo,
regardless if you lost a bit of your
yeah,
trade.
yeah, I agree,
For
and
fun.
I think we can test our strategy right now because Bitcoin is pumping.
Mm-hmm.
On the 5 minute, we're above the 21 EMA, the 20, and we're also currently above the channel, like that very macro channel. So
Mm-hmm.
this could potentially be very bullish, and we're in a short. And I'm currently in a loss, although I've exited a lot of my position in
Oh,
profit. So, ooh, man, looking at the hourly, this could potentially be extremely bullish candle. 23 minutes to close, very long wick to the downside, support offer 200. This could be like a bullish hammer candle, man. So
oh yeah.
we took this short because we broke down beneath many critical support levels, and so this in the long term could continue to go down, but in the short term here, we're seeing price action that could potentially invalidate our short. And so
Mm-hmm.
now is the question we have to start considering. Should we fully exit out or what? Because we're getting very long wicks to the downside. 5 minute RSI is going up. Same with the MACD. We so the thing is, we could potentially break up to like the 15, get
Are you
retracement of the
asking me
15.
like if
Yeah, I'm
we
asking.
should leave
Yeah,
right
yeah,
now?
yeah.
Oh, I already left it.
Oh, you already left.
I left it like 10 minutes ago.
Thanks for letting me know. All right, you know, um, all right, yeah. I think I'm gonna wrap up the video because I want to take a moment here to perhaps exit this because this could, continue to go up a bit more. So, yeah, take care, y'all.
Take care.